Next up, we're going to hear from Patrick Reed, who is presenting on behalf of Pilot Gold. Pilot is a story of a portfolio of exploration properties that has scale, that has opportunity, and it's being driven forward by a team that has done it before. So this is a team that has taken a Nevada property, found gold where no one had found it before, and sold it for over $2 billion to Newmont. Now this same team is applying that expertise, a very strong technical team, and a very strong capital markets group to do it again. They have projects again in Nevada and Utah where the geology, the geologic idea is similar to what they did before, and they have projects in Turkey that have some really interesting geology and some very significant scale going on, and a lot of infrastructure that's right there. So I will let Patrick tell the rest of the story.
Thanks very much, Gwen. I'll take the next 35 minutes to cover off some of our projects here. Draw your attention to the forward-looking statements. I will be making some forward-looking statements regarding some of the projects. But I thought I'd also like to touch back a little bit on the fundamentals, because it's a very strange market, and how those fundamentals and exploration impact and I think affect what the investment opportunity is today for yourselves, but also for Pilot here as well. Over the last 4 years, exploration across the entire metals sector has been absolutely hammered. If you go back kind of to the peak in 2012, across all metals, whether it's copper or gold, et cetera, you had roughly $22 billion getting spent and invested into the ground, and that number has dropped 52% over the last 4 years. And in fact, year over year from 2014 to 2015, it dropped a further 16%. And then exploration by type, i.e. in and around your existing mine, greenfields or grassroots or late-stage development exploration has fallen as well, right across the board over the last 4 years. In fact, for us, what's most important is grassroots exploration has dropped 60% over the last 4 years and dropped a further 17% year over year. And as many of you know, this has been a very tough market over the last 5 years, and certainly even over the last 12 months. But even junior exploration into the ground, which is one of the key aspects of where new discoveries come from, is down 65% over the last 4 years, and down a further 22% over the last 12 months. So there's very little money, bottom line, going into finding new metal, whether it's copper, whether it's gold, whether it's uranium. No one's investing in there. So what's the point of all that? As you can see on the chart on the left, there's been virtually no new discoveries over the last 20 years. The amount of gold discoveries, in fact, has gone from a peak of about 140 million ounces down to rolling numbers of less than 3 million ounces per year. And this is coming to a point where, as exploration winds down and is virtually non-existent in the sector, that you're right at the same point of peak production of all the major gold miners. So on the right-hand chart, you can see, and you've heard companies like Goldcorp talk about it, that they're seeing a continuing decline in the production levels of gold moving forward. So there's a huge fundamental disconnect here in the markets between what's happening on the exploration. There's no new mines getting built. There's very little exploration happening right at the tipping point where you have production beginning to fall off a cliff. That obviously makes the case somewhere in the coming months or years of a strong rally on gold, strictly driven on supply and demand fundamentals. And for us, we think Pilot is optimally positioned to seize on that. So our focus, as Gwen talked about, is in Nevada and also in Turkey. But we focus on the high-quality assets that we think actually have the potential to be a mine. We're not interested in just drilling out big deposits and hoping that someone will come and take us out. But we solve difficult problems of metallurgy, permitting, land acquisitions, and de-risk the projects all the way along. We like the low-cost jurisdictions. We pick up projects that are incredibly data-rich. We can get a head start on the greenfields. And ultimately, what we're looking for is a commercial success. Building off a great big deposit that no one is ever going to mine does not create a lot of value. And that's exactly what we did when we were Frontier Gold and de-risked the Long Canyon project and ultimately sold that to Newmont for $2.3 billion. That project is actually now in construction, and they've roughly tripled the resource since we sold it to them 5 years ago. I had the opportunity to present here 7 months ago, May 31st, at the first Metals Investors Forum, and since then, obviously the market has come down strongly. Our share price has been beaten up like everyone else's. But at the same time, we made significant advances across all 4 of our key projects. In the Great Basin of Nevada and Utah, we discovered a new mineralized zone outbound of our western flank high-grade zone. We reported a first initial resource at Kinsley Mountain, where we've got roughly 500,000 ounces we put on the books with a high-grade core of about 6 grams to 300,000 ounces. We found that with metallurgy, we can get great recoveries out of our host rocks, upwards of 90%, create a nice clean concentrate, a low-cost process. And ultimately, we started our first maiden drill program on our Goldstrike project that we picked up 15 months ago and demonstrated gold mineralization, I should say oxide gold mineralization, across a 5-kilometer strike length. In Turkey, we doubled the mineralized footprint of our copper-gold porphyries at TV Tower, and at the Valley Porphyry, we showed metallurgy that on the same flow sheet of our other project, which is joint ventured with Teck, we can run that through the same system, get high-grade recoveries, and create synchronous value there. So we did a lot of work last year. We made a lot of advancements on our project. We created a lot of project value, but the market simply didn't care. So our focus in 2016 is going to be primarily on the Great Basin in Nevada and in Utah. And as my chief geologist, who's here with us today, so if you do have any more technical questions, please come up. But she says, geology does not reflect or does not respect state borders. So the geology you see in Nevada is also the same geology that you see extend across the borders into Utah. So Goldstrike is a project we picked up in the summer of 2014. It was a past producer. It's a Carlin type system. These are kind of the main big 40 million ounce areas in central Nevada. There you can see the Cortez or Carlin trends. It was a past producer, mined for about 4 years, produced about 210,000 ounces at really reasonable grades for oxide for a heap leach operation 1.2. When they shut down, the previous operators left a significant amount of unmined ore in the ground, and you can see some of the intercepts there of 1.5 to 2 grams over 30 to 80 plus meters. And ultimately, we've defined, through the mapping and through the old mineralization, roughly 96 square kilometers of known mineralization on the project. We spent 15 months taking apart all the data, so 1,500 drill holes, 125,000 blast hole samples, and if you think, if you ever took an accounting course, if you can imagine being a junior geologist sitting in a dark room punching those numbers into a geologic model, that's pretty dry work. But it came up and creates that geologic model that you can see on the top there, where we can figure out exactly where the gold is sitting in the mineralization, and then take that and apply that into modern techniques, what you see on the bottom there, which is called a leapfrog model, where you see the same mineralization coupled in, and then a couple of our new intercepts showing that we can extend mineralization well beyond what the past operators were doing. Our first past drill results were on the main area that we produced in December 1st, where you're looking at 1 gram up to 1.7 grams over up to 40 meters. And most recently, a couple weeks ago, another 20 meters at 2+ grams and good long stretches of 76 meters at ½ gram, all oxide, over a zone of roughly 5 kilometers. As you can see on the property map here, we've got mineralization everywhere. And where it dies undercover, we've got just an exceptional opportunity here to define 2 to 3 million ounces of oxide. So the first focus then coming up then is going to be tapping the drilling that we've done here, all the modeling that we did over the last 15 months and the past records of blast holes, and putting out a first resource here late spring. That'll give us the first footprint. Moving forward from there, we can see to continue to advance and start the next drill program here in April. Coincident with that, we'll be getting the more de-risking of permitting, full plan of operations, and adding more lands to the package. So this is going to be our kind of key focus here for the first part of the year. The other main project that we'll be focusing on here is Kinsley Mountain. This is one that we picked up 4 years ago after an exhaustive search, and as we were having success as Frontier drilling off Long Canyon, we went all through the northeast area of the state looking for more Long Canyon type projects. We could never get this project as Frontier. It was the previous operators realized that if they folded it into Frontier, it probably wouldn't get very little work done on it. Ultimately, as Pilot, we were able to get a deal done, get control of this, and hit this with all our might. We've had a huge amount of success on this project over the last couple of years. We own 80% of it. It too is a Carlin type system that is off trend. And we think this whole eastern area of the state, this eastern Great Basin is home to immense opportunities because everyone's pretty much been ignoring it. As I mentioned, we put a brand new resource out on this after a couple of years of drilling, where we put roughly 500,000 ounces pit constrained on here at 2 grams. The most important one being the Secret Canyon unit there, where you can see just under 300,000 ounces at 6 grams per ton. Importantly, we continue to grow this high-grade zone with the discovery there of the 2 grams and 3 grams over 9 and 18 meters off the same hole. We've got enough water to run a mid-size heap leach project here. We've done the metallurgy where we can show we can get 80 to 90% of the gold out of the rocks through very simple and low-cost flotation processing. And ultimately, when you look at the project there, all the exploration, all the past focus of the operators has been really on that one main mine trend. The whole northern area of the property has really never been drilled. That's 12 kilometers of prospective stratigraphy. This is how the geologic model looks. You can see the oxide across the very top, some transitional, and in the bottom left there, you see that secret canyon unit. In this Carlin-type sediment-hosted thing, you have mineralization that appears across multiple different stratigraphic sequences. If you have a gold mineralization at the top sequence there, in what's called the Dunderberg, chances are there's a structural conduit that fed that gold there that sits in a lower stratigraphic sequence. That was that same model that worked for us at Long Canyon, and it's the same model that allowed us to discover that western flank zone in that secret canyon area in the pink there. We think that same unit, that secret canyon unit, high grade, comes underneath the range, extends all the way underneath the past and old pits, and the current focus, or the next focus of drilling, will be to the south of the pits where that unit starts to shallow. That same unit where you can see the Kinsley mine trend there running on a northwest structure there, that same structure where we've got that roughly 500,000 ounces there, past production of 150,000, 180,000 ounces there, is roughly almost 1 million ounces total in past production resource there. That same structural northwest structure reappears 5 times up and down that range, as you can see. And we've got 5 different levels of stratigraphy on the left that you can see that are primed to explore further. I'm not going to touch on our Turkey projects at this point, so if you have any questions on Turkey, please come by and talk to Moira or myself. But as I wrap this up, it's been a tough market for everybody. I think the fundamentals for where exploration is, and exploration of the main companies out there, whether it's exploration, development, producers, have been absolutely hammered and beaten up the worst. We've got a strong analyst following, not only within this room, but also the main key banks and specialty banks out there, strong institutional ownership. And as you can see, our market cap has taken a real beating over the last 12 months. We were down to 27 million as of a couple days ago. We've got roughly $10 million in cash on the books, so a net enterprise value of about $17 million. So we're cheap just like everybody else, but the market is as the market is. So my time's up. I thank you very much. And if you want to know, the Canucks are still up 2-1 against the Pittsburgh Penguins.